Hey guys, thanks for tuning in to my video blog. I'm Scott with Adams Equity. Before we get started here today, we're going to be talking about the Fed, interest rates, and what has happened recently and what we think is going to happen. And how that affects your decision making going forward, buying or selling real estate. Before we get started, if you take a look at the right of my website, right beside the blog here, there's two little buttons, or it would be also possibly attached to the comments below, where you can search all homes in the metro Atlanta market, find your neighborhood. You can look at some of my featured communities, or you can also get an instant valuation and find out kind of ballparky what your house is worth. And I can always take those and tune those up once I know you have an interest in getting very accurate numbers. So anyhow, hang out. Let's chat about the Fed. Thanks for tuning in again. In June, the Fed raised interest rates another quarter point. Kind of funny the way people think that, hey, quarter point up on the interest rates just got raised a quarter point up, so mortgage rates should go a quarter point up. Surprisingly, they really don't have that much to do with each other. The Fed interest rate does eventually affect the mortgage rate, but not as a direct one-to-one. The mortgage interest rate is based off the 10-year Treasury bond, and it's inversely proportionate, really. So if the bond rate goes up, the mortgage interest rate goes down, and vice versa. If the bond yield goes down, the mortgage interest rate goes up. So 30-year mortgage last month, still lowest level in 2017, 3.9%. After that, the Fed raised interest rates, the value of the 10-year Treasury bond went up, mortgage rates went down. What does that mean? They're not going to stay here forever. If you're in the market to buy or you're in the market to sell, let's take a look at your house and find out what this is going to do to affect your money. If you're buying, you can lock in an incredibly low rate for a long time. If you're selling or considering selling, it may be more beneficial because we're coming off the top. On a previous video, I went over, the kind of a market correction that's happening, that we think is happening right now. We can kind of see some indicators with number of pending transactions dropping way off versus last year, number of active properties, but the beginning of the year being incredibly strong. So what does that mean if you're selling your house to have to worry about interest rates? It means your buyer's affordability number, because if interest rates go up, they can afford less house. So as interest rates go up, I don't know if you remember the 80s when interest rates were 12, 13, 15, 18%. Thankfully, hopefully we'll never get there again, but you can definitely afford much less, especially at the prices now, the inflationary prices that we've seen happen over the course of the last couple of years. So definitely take a look at your plans. Keep a finger on the pulse of what the Fed is doing. They have two more meetings this year. There's two different schools of thought. One school of thought says they're going to raise rates on both of them. Obviously, it'll depend on what's going on with the economy, globally, nationally. Don't really take account what's going on here in metro Atlanta. The Fed doesn't, but yeah, definitely something to keep in mind as you make decisions going forward. I think that we'll see one more interest rate hike this year. I think the end of the year is going to soften from an economic standpoint. I think the stock market is a bit overinflated and due for a correction. And if that begins to correct early enough, I don't think that we'll see interest rates go up either time. But I know right now, if we remain status quo, we'll probably see one more interest rate hike as we're coming out of this hot summer market. So if you want to know how interest rates, how affordability, how inventory is going to affect your home, feel free to give me a call. Reach out to me via email, scott@adamsequity.com, or you can call me here at the office, 404-564-5320. Thanks for tuning in. Look forward to seeing you again next time.